In this video, we'll take a close look at the wheel trading calculator. This is a fantastic tool to use before opening any trade and one of our most important decision-making tools. It helps you decide which potential trades to open based on profitability, risk, and budget limits. So let's take a look. Okay, so in this video I'm going to give you a detailed explanation of the wheel trading calculator. For the other sections of our options wheel strategy tool, see our other videos. Check the description below for links. You can download the options wheel strategy tool from our website at wheeloptiontraders.com. Link again in the description. Go there for all things related to wheel options trading, including access to our amazing video training course dedicated to the wheel strategy. There's over 50 videos and counting. So to start, it's worth noticing the question button at the top of the wheel trading calculator screen. Clicking this opens help shapes with lots of useful information on how to use this screen. Click again to toggle off. Okay, so here we go. This is the wheel trading calculator screen, third tab along. This is a fantastic tool to use before making any trades. Using it pre-trading ensures that we do not spend more capital than we have available at our broker, and it's also a great comparison tool. We can compare different option trades and select the best ones to go forward with. The best way to demonstrate this tool is with an example. Okay, so at the top there's a big box to enter your buying power. This is basically how much capital you currently have available at your broker to spend on trades. The amount of buying power available to you depends on the type of account you have and if you're using margin and how much margin your broker provides you with. If you have a cash account, then you don't have any margin. You simply trade with whatever amount you have deposited in your broker account. If you have a margin account, then you can usually borrow up to 50% of the purchase cost of stock, essentially doubling the amount of capital available for you to trade. However, this can differ between brokers, so make sure you find out the specifics of your account at your broker. And for a more detailed overview of different trading accounts and using margin to trade, check out our video training course, links in the description below. So back to the tool. Let's imagine we have $50,000 capital available to trade with. So let's enter that into the box. Okay. Now, imagine we've been doing some research and we have found 5 different stocks that we are interested in trading the wheel strategy on. Basically selling put options on them, and if the underlying stock gets assigned to us, then we'll start selling calls until the stock is exercised away from us. And if you're unfamiliar with option trading or the wheel strategy, I'd encourage you to go through our video training course. And we also have great sections on how to select potential stock to trade the wheel strategy on. Again, the link's in the description. So here are 5 potential stocks that we're considering trading put options on and their contract details. Okay, so first up, let's add 5 new stocks here by clicking Add New Stock 4 more times. Great. Already we can see at the bottom cash requirements section, the total must be less or equal to our buying power of $50,000. And therefore with 5 stocks, we can spend up to $10,000 per stock on average. So that's a good starting point. Okay, so let's start filling in the details. So stock 1 is Apple. Here in Add Ticker, I type AAPL and Apple's details auto-populate. As you can see, the current share price is shown, and this is live and updated every 5 minutes. Or you can click the refresh button here and it will update the prices. Okay, sector needs to be updated. I know Apple is technology, so I'll select that. You can quickly find the sector of each company on finviz.com. Okay, so next let's add the trade details. Put option strike price is $120. So that shows a drop of 20% in the underlying share price would be needed to hit our strike. Next up, option premium, so $1.42, okay. Keep the date sold as today with the expiration of 16th December. Okay, so that shows 50 days until expiration. We'll keep it at 1 option, and that's it. Now, below that, we can see some useful info. We can collect a maximum potential of $142 premium on this trade if we leave the trade to expire, and that equates to an average of $3 per day. Now, if the underlying stock price falls below our strike price by expiration, we'll need $12,000 to purchase the 100 shares required by the option contract. Remember, each option contract covers 100 shares of the underlying stock. So the strike is the price we agree to buy the stock at. Therefore, $120 times 100 shares equals $12,000. And this $12,000 is our capital requirement. So by annualizing that, we can see that our return on investment for this trade would be 8%. And that's better than any bank could give you. Okay, let's add the other 4 trade details. Okay, and done. Right, first up, let's check our capital requirements. Total required is $37,800. So if all 5 of these trades end below our strike price, we would need $37,800 to purchase all the stock. Now, there are a lot of complexities in managing this. It depends on your strategy whether you want to get assigned or not. And our video training course goes into this in great detail, so it's worth checking that out. The link's in the description below. Anyway, we now know that we would have enough capital to cover such an eventuality, so that's good. Next up, let's check the sector and industries. In simple terms, we are looking for variety here. Multiple stocks in the same industry would increase our risk. A disaster in a particular industry could take all stocks inside it down, leaving the stockholders with greatly devalued stocks. Now, here you can see that MTDR and PSX are in the same sector and industry, so I'd most probably look at eliminating one of those right away. Let's see. Well, MTDR requires a 30% drop in stock price to reach the strike price, whereas PSX is only 9% away. However, PSX is making $8 premium per day compared with MTDR's $2. There is a difference in premium annualized too. However, PSX requires almost double the capital to purchase the underlying stock if it is assigned. Okay, so let's say I'm looking for a low-risk strategy due to the difficult market conditions. So let's remove PSX from our list of potentials. As you can see, we already have a powerful tool here for our decision-making process. Okay, so now we have 4 stocks left. We can add more potential stocks to this list and compare different metrics as we did with the last 2 stocks until we've found a combination of stocks that we are happy with and can start trading the wheel on by selling puts. We can also change the number of options to trade and see the difference it makes to the overall figures. So for example, if I change the number for Apple to 2 options, it'll double my premium per day, but also it'll change my total capital requirement to $40,500. That's just $9,500 short of my maximum. So it's another consideration to make. You can also play around with the other details, such as trying different strike prices, premiums, and expiration dates. So as you can see, this tool allows you to play around with different combinations and values until you find the ideal trades for your own strategy and risk profile. It's an incredibly powerful tool and well worth using every time you trade. Now the other side is for when you're selling calls. This side is more straightforward as you're constrained by the assigned stock. However, it still provides some great data. For example, let's say you go ahead with selling a put on ZM, and then by expiration the stock has fallen more than 10% and you get assigned 100 shares of the stock. You are now onto the next stage of the wheel, selling call options until the ZM shares are expired away from you, meaning your call strike price is reached and your shares are sold away from you to the options buyer. So right now we've just become owners of 100 shares of Zoom and we're looking at selling call options. Before doing that, let's fill in stock 1 details. So ZM and select communication services, Okay, and the stock was bought at the strike price, so we'll enter 75 and keep number of shares at 100. Now let's think about the strike price we want. If we enter 75, you can see there's no rise, and the stock would be sold, if exercised, at $7,500. And that's the same price we bought it for. Okay, let's continue. Say premium is 0.93 and date sold is the Monday following the day we were assigned the shares, so the 28th of November, and let's choose expiration as 15th December. Okay, now you can see the details there. $93 premium, averaging $5 per day, and that's a 25% return annualized. At the bottom, we can see that the total gain is $93, which is made through the premium collected for the option trade. Okay, let's see what happens when we raise the strike price a little, say from $75 to $77. Okay, so now we make a total gain of $293. The premium plus an extra $200 from the profit of the sale of the stock. We bought 100 shares for $75 per share and we sell for $77 per share. Looking at this, we've got a really good overview of the potential trade. We can now try out different metrics, try different expiration dates, premiums, and strike prices until we come up with a combination we are happy with. Hopefully you can see the powerful application of this wheel trading calculator. It's super useful and can keep you out of financial trouble with your broker while providing you with comprehensive insights in selecting stocks to trade and values to trade at. If I've missed anything out or you have any questions about the wheel calculator trading tool, please let me know in the comments below.